Gold is only in all-time highs in nominal terms.
Yeah.
In real terms, against the US dollar at least, gold is not at all-time highs. And people need to understand that when they think about where gold might go.
Yeah.
The second thing is, with regards to the underperformance of the gold price, it's worth noting that buying of gold is not widespread. You are not seeing retail buying of gold except in China and India. The gold purchases that you're seeing are central bank purchases. And those central bank purchases are really looking for an asset that could be a medium of exchange outside the US dollar. It's the weaponization of the dollar rather than the fear of inflation that is the driver of gold itself. These gold buyers, central banks, are not buyers traditionally of gold equities or equities at all, for that matter. So it makes perfect sense, pardon me, at the top of the discussion, to say that the gold bull market and the market in gold stocks thus far is disconnected, because while the buyer has a need for gold to circumvent the US dollar, the buyer doesn't have a need for gold stocks.
Yeah.
But there's a second reason that I think is worth discovering, and that is the chronic underperformance of gold mining companies as businesses for the last 50 or 60 years. Lucian, if you were as old as I, which I can tell you're not, you would remember the decade of the 1970s when the gold price went from 35 US dollars to $850, the best bull market for gold stocks probably in recorded history. The hangover from that, if you will, is that the gold stocks that rewarded investors the most in that bull market were the ones that exhibited the most leverage to gold. And the most leveraged companies, ironically, are the most marginal. If you're a high-cost producer and the gold price goes up, your margin increases faster, ironically, than a more efficient producer. When the investor, which they have now for the last, I'm going to say, 50, 60 years, looked at gold investments, they looked for the most leverage, which is to say the most marginal. And the industry became very, very marginal.
Yeah.
If you look back to the decade 2000 to 2010, the gold price in US dollars was up more than sevenfold. And yet free cash flow per share among the XAU in the US declined. It took real skill to screw up a market where the selling price of your product increased sevenfold and you reduced free cash flow per share. So the expectations that the investment community has around gold mining companies are extraordinarily low. From my point of view, that's good news. It's good news because I don't have much competition on the bid for gold mining stocks. And I would suggest to you that some investor expectations have become more rational. I would suggest that most of the management teams that presided over the destruction of capital in the period 2000 to 2010 have been allowed to pursue other employment opportunities. So I think that the gold industry is held in low repute, ironically, right at the beginning of its renaissance. And I regard this as a particular opportunity.
Yeah, can we apply this answer you gave me on silver as well? I mean, silver is also one step up, two steps down. How is the outlook for silver from your corner?
Well, the silver stocks are tricky because there aren't very many of them, first of all. And also because the silver companies are price takers. Most silver that's produced is produced from recycling or as a byproduct of other metals. So to understand something about the silver price 5 years from now and 10 years from now, you have to understand something about what the production levels of copper, lead, zinc, and gold are, where silver is produced as a byproduct. It is very, very, very tricky. It's worth doing because in the later stages of a precious metals bull market, gold moves first. We all know that.
Yeah.
In the later stages of a precious metals bull market, when silver moves, it moves much faster and much further than gold does. And the silver stock buyers are manic depressive. They either hate the material with a passion, like right now, or they're absolutely rabid buyers.
Rick, I have a list of companies I would like if we can cover them. The list includes silver, copper, and uranium companies, and I would like to hear your opinion on them. if you hold them or plan to add them in the future, or maybe you sold them, some pros and cons.
Okay.
Let's start with silver, and we'll start with Silvercrest metals.
Silvercrest, I don't own. I like the operating performance of the company. I was shocked by the degrade in reserves between the feasibility study and production. They're looking to address that. When I see a new resource statement and I see what the reserve life looks like, and I can match that to their operating performance, I look forward to becoming a shareholder again. I do not hold it now pending the outcome of delineation drilling.
Okay. Pan American Silver.
Pan American Silver I own and I am adding to. I was disturbed and sold when they acquired Yamana. What they were saying was that the Yamana assets were worth more than their own assets, which was disappointing to me. But then the price fell by 55%. Meanwhile, the company is selling off the redundant assets in Yamana to strengthen their balance sheet. And of course, there are two wonderful optionality plays within Pan America. One, 500 million high-grade ounces in Guatemala, where they need permission to restart. Another 500 million high-grade ounces in Argentina, where hopefully the change in administration allows Pan American finally to beneficiate those ounces for the benefit of the Argentine people and Pan American shareholders.
Good point. Hecla Mining.
I own Hecla. There are some operating challenges there, but Hecla is probably, in terms of investment, the foremost brand name for American investors to participate in the silver trade. Fair to say, I'm also a friend of the CEO, and I like the fact that I can ask him direct questions and get direct answers, even if the answers aren't too pleasant for him to convey to me.
Yeah. What about the Vizsla Silver, Greg Perry?
I am a decent-sized shareholder of Vizsla. Your listeners need to understand there's some unanswered questions around Vizsla. This is highly speculative. I love circumstances where there are indicated big deposits, but some unanswered questions, where I think I know how the questions will be answered. So I'm a fairly large shareholder of Vizsla Silver. I like the size, I like the grade, I don't like the neighborhood, but you take the good with the bad.
Yeah, but you have to agree it's a great management.
He's a fantastic, fantastic guy.
Yeah, definitely. First Majestic.
First Majestic Silver, I've owned on and off for a long time. I don't own it now. It's the most leveraged silver name I know. So it will respond very well to increases in the silver price. My concern revolves around the acquisition of Jarrett Canyon and their need to invest money in Jarrett Canyon, their need to delay gratification for a couple of years at Jarrett Canyon. If they succeed with Jarrett Canyon the way they succeeded with San Dimas and other large tired mines that they bought, this will be a spectacular performer. But remember, I began that sentence with the word if. I'm holding out until I see something around the answer to if at Jarrett Canyon.
Got it. Mag Silver.
I own Mag Silver, very high quality deposit. I don't know where they go from here. I don't know how it gets much better. There is a suspicion in the market that Mag Silver can't be taken over because there's only one bidder, but that's wrong. The high-grade nature of that deposit means that it could be bought by either, as an example, Franco-Nevada or Wheaton Precious, and then sold on to the Mexican company in return for a stream and a royalty. I don't think that the final chapter of the MAG story has been played yet.
Yeah. Fortuna Silver Mines.
Fortuna Silver I own, although it's not really a silver company anymore.
Yeah.
It's more of a gold company.
Gold. Yeah.
Obviously, they're having both political and operational problems at San Jose, which has been their leading source of cash flow. On the other hand, their Argentine operations are finally working, and they're establishing a real producing base in West Africa. The question was always, could a Latin American CEO and a Latin American management team operate in West Africa? And the answer is crystal clear. The answer to that is yes.
We have it's a lower on scale, Silver One Resources with assets in Nevada.
I don't know enough about Silver One to comment.
Okay, Dolly Varden Silver.
Dolly Varden, I'm an owner. I'm a small owner. I've sold enough that I have my cost out of the stock. It's been a really great market performer. What they have now is two reasonable deposits. And my bet is that those are both part of the same mineralized event. If they can turn those two deposits into a silver district, particularly if they can do it in Tahltan territory, the First Nation that is their host, I think you'll see a spectacular outcome. But notice again that I said if. This is
Okay.
highly speculative.
Yeah.
I have a very high regard for the CEO. I like the deposits, but they need to get bigger. They need to establish district scale.
Final silver, then we will move to gold. Abra Silver Resources.
Abra Silver, again, I'm a large shareholder. I'm embarrassed to say I helped Silver Standard buy that asset years ago as Diablios for $3 million. We were warehousing it and didn't do much work. The new management team has done a bunch of work and turned what was a $3 million investment by us into a $250 million net present value. Large deposit, growing, better infrastructure in the region. It was in the middle of nowhere 30 years ago, but the lithium activity in Salta has changed all that. Again, what you really have is an exploration story. What I think is that you have a deposit that's threatening to turn into a camp. So I own it, but it's highly speculative.
Let's move to copper, starting with Ivanhoe Electric.
I own Ivanhoe Electric. I own it because of really promise. The Typhoon technology that they have licensed with regards to mining has the potential. I'm not saying it is, but it has the potential to be an absolute game changer.
Agreed.
Of course, the power behind the throne, Robert Friedland, is the most successful mining financier of my generation. I also like the Santa Cruz asset in Arizona, although it's early on, I like the potential, and I say potential, for a deep porphyry, a buried porphyry around Tintic. So while I own it, I don't talk to former clients about it very often because it is highly, highly, highly speculative. For people who are very close to me, people who have done business with me for 40 years, and people who have a speculative bent, of course, I suggest that they get to know Ivanhoe Electric better.
What about Hudbay Minerals?
I don't own Hudbay. Again, I see it as a collection of mostly second-tier assets. And while I think the company is okay, there are, from my point of view, better companies in the same market cap space as them.
Two Lundin companies. First is Lundin Mining.
I own a lot of Lundin Mining, and they seem to cruise from success to success. They have made very fortuitous acquisitions. They're generating a lot of free cash. And if I were a betting man, and I am, I would bet that it's Lundin Mining that consolidates the Lundin exploration assets in northern Argentina. This has the potential to be generationally transformative.
What about Philo?
Well, Philo is, I've been there, so I need to start by saying this is a remote and desolate part of the world. This is really, truly in the middle of nowhere. So the upfront capital costs to build in that district are going to be spectacular. It's worthy to note that the Lundins can approach this asset either from the north and the east or from the west, from Chile. They're all over the district. Philo is, well, let me rephrase this. The camp, the Vicuña district, including Philo, is a really, really important copper province. It will probably take between $8 and $10 billion to build the camp. And I actually think the Lundins have the capability of doing it.
Yes.
This grade and the fact that we really don't understand after 20 years the size and scope of the deposit reminds me of nothing so much as Ertsberg and Grasberg 40 years ago when Freeport took control of those assets in Irian Jaya. I'm not trying to suggest that Vicuña is another Grasberg, but I'm not trying to suggest it isn't too. It's a one-in-a-generation discovery.
Definitely. What about Teck Resources?
I own Teck. I think that the restructuring of Teck will surprise people. I'm delighted that Teck has decided that they are going to monetize the coal assets internally, which is to say, distribute them out, monetize them partly at the corporate level, and then let us decide what to do with the rest of it. Ironically, the coal business is probably the best business in Teck. And they've had to monetize that really for ESG considerations. But the remaining company is a pretty darn good company. And I suspect that the value of the whole is greater than the price put on the sum of the parts.
Taseko mines.
I don't own them. Again, a range of assets that, while it's attractive to Canadians, are not by any stretch of the imagination tier one assets.
Let's try with some on the lower scale. Faraday copper.
Don't know enough to comment.
Okay. Brixton metals.
I am having a difficult time myself understanding the drilling well enough to make a deposit out of it, so I don't own it.
Okay. Oroco Resources.
Again, don't know enough to comment.
And the final one, Surge Copper.
Again, don't know enough to comment.